Let me ask you something. That empty property you own, is it just sitting there, gathering dust, or is it actually costing you a small fortune every single day? For thousands of owners across the UK, what was once a quiet asset has now become a really serious financial liability. And the reason? Well, it's a tax trap that most people just don't see coming until it's far too late. Take a look at this number. That's over £500,000. And get this, that's the extra tax a single council, Bridgend, collected from empty homes in just 1 year. This is happening up and down the country. It just goes to show how punishingly expensive leaving a property vacant has become. So the big question is, how do you make sure you don't get caught in this trap? Well, that's exactly what we're here to figure out today. We're going to walk through, step by step, how you can avoid paying council tax on an empty property here in the UK. And you can trust what you're about to hear. This isn't just guesswork. This entire guide comes straight from the expert tax advisors at My Tax Accountant, one of the UK's most trusted accounting firms. They've put this together to give you a clear and reliable roadmap. So here's our game plan for today. We'll start with the tax trap itself. Then we'll get into those painful council tax premiums that catch so many people out. After that, it's all about the solutions, your key exemption lifelines, what to do if you're doing major renovations, and some of the less common exemptions. And finally, we'll wrap it all up with a clear action plan for you. Right, let's dive into Section 1, the empty property tax trap. So why is leaving a property vacant so much more expensive than you might think? First things first, we need to be clear on what the council actually calls an empty property. It's pretty simple, really. It's a property where nobody lives as their main home, and it's substantially unfurnished. But here's the real kicker. Since 2013 in England, all those old rules about getting a bit of a discount automatically, gone, vanished. Councils can now hit you with the full 100% council tax bill from day one. Yep, no grace period at all. Okay, let's move on because this is where things can get, well, really expensive. We're talking about council tax premiums. Stay with me here because this part is crucial if you have a property that's been empty for a while. Okay, look at this. This is what's known as the empty homes premium ladder, and honestly, it's a real game changer. Since April 2024, the rules got a lot tougher. If your property has been empty for more than a year, the council can slap a 100% premium on top of your bill. That means you're paying double the tax. Leave it for 5 years, that premium shoots up to 200%, meaning a triple bill. And after 10 years, it's a staggering 300% premium. We're talking a quadruple council tax bill. This catches so many people. So let's nail down this term, substantially unfurnished. What does it actually mean? It's a really key legal point. We're not talking about missing a few bits and bobs, like cushions or some cutlery. No, it means the absolute essentials for living aren't there. Things like beds, sofas, a fridge, a cooker. Honestly, leaving a lonely deck chair in the living room just isn't going to cut it. Right, now here is an absolutely critical piece of advice from the experts at My Tax Accountant. This is a classic mistake that a lot of owners make. You might think, oh, I'll just move in for a weekend. That'll reset the clock. No, it absolutely will not. The council only stops the clock once the property is furnished and you've lived in it for more than 6 consecutive weeks. Anything less, and it's like you were never there. Getting this one detail right could literally save you thousands of pounds. Okay, we've laid out the problem, and it's a big one. So let's get to the good stuff, the solutions. This section is all about your key exemption lifelines. These are the most common legal ways to avoid those massive charges. So you'll definitely want to listen up for this part. So the first big lifeline is what's called the bereavement exemption, or Class F. Imagine this scenario. You've inherited a property, maybe in Birmingham, from a relative. While that property is being sorted out as part of the estate, it's completely exempt from council tax. That lasts right up until probate is granted. And even better, the exemption carries on for up to 6 months after that. That gives the family some vital breathing room to sell the property or figure things out without being hit by a massive tax bill. Next up, we have the care-related exemptions, and these are just so important for so many families. There are 3 main ones to know. Class E is for when someone has moved permanently into a hospital or a care home. Then there's Class I, which is when someone has moved to receive care somewhere else, maybe with a son or daughter. And Class J is the other way around, when someone has moved out of their home to provide care for another person. Now, the really crucial thing here is that these exemptions often have no time limit. You will need to provide proof, of course, like a letter from a doctor. Then we've got a few other key exemptions for very specific situations. For example, there's Class D, which applies if the person who's liable for the tax is in prison. Class L kicks in when a property has been repossessed by the bank. Class Q covers bankruptcy situations, and Class K is for when a property was a student's main home and is now empty. As you can see, each one is tailored to a very particular personal circumstance. All right, let's tackle a really common situation now. Renovations. This is for anyone with an empty property that needs a bit of work. But the big question is, when can those repairs actually put a pause on your council tax bill? Okay, this slide really gets to the heart of it. We need to have a little reality check. There is a massive, massive difference between doing some minor repairs and a property being truly derelict. Things like rewiring, putting in a new kitchen, a bit of plastering. The council sees these as normal jobs. The property is still basically habitable. So you're not getting any tax relief. To even have a chance at relief, the property has to be in a really bad state, totally derelict. We're talking major reconstruction needed. Maybe it's not even wind and watertight. Only then might the valuation office agencies step in. So, if you think you're in that situation, how do you actually get a derelict property's tax band deleted? Well, here's the process. Step 1, be honest with yourself. Is the property genuinely uninhabitable? Step 2, and this is so important, you don't call your local council for this. You have to contact the Valuation Office Agency, the VOA. They're the ones with the power here. Step 3, get your evidence ready. You'll need strong proof. We're talking photos, surveyor reports, a detailed schedule of the works. And finally, step 4 is the VOA's decision. If they agree with your assessment, they'll officially delete the property's council tax band while the major work is underway. And here's another fantastic expert tip from my tax accountant. It's a heads up for the future. Let's say you do manage to get the band deleted. You need to know what happens when the work is done. When that band is put back on, the VOA treats it like a brand new property. What does that mean? It means all those wonderful improvements you've made will be taken into account, and that could easily lead to a new, higher council tax band. It's just something you need to have on your radar. Right, we're making good progress. Let's move into our next section, which covers some of the more uncommon exemptions and what your final options are. What happens when your situation just doesn't seem to fit into any of the standard boxes? Okay, just to be thorough, let's quickly run through a few of the more niche statutory exemptions. There's Class B for properties owned by a charity, that's exempt for up to 6 months. Class G applies if the law actually forbids anyone from living there, like with a condemnation order. Class H is for a vacant property being held for a minister of religion. And finally, Class T is for an annex that has a planning restriction on it, meaning it can't be let out separately. But what if none of that helps? What if your situation is truly one of a kind, totally unexpected, and it's causing you serious, exceptional hardship? Is that it? Is there anywhere else to turn? Well, yes, there is one final door, but I have to be honest, it is a very, very small one. It's called a Section 13A discretionary reduction. Think of this as the last resort button. It gives the council the power to reduce your bill, but only in the most exceptional circumstances. I have to stress this, we're talking about things like your property burning down and you having no insurance. It's heavily means tested, and to be frank, it's very rarely granted. Okay, we have covered a huge amount of ground, so let's bring it all home. It's time to pull this all together into a simple, clear action plan for you. Let's talk about the key takeaways and your next steps. So what are the absolutely crucial things you need to walk away with today? Number 1, remember, those heavy premiums now kick in after just 1 year of a property being empty. Number 2, your very first check should always be to see if you qualify for an exemption based on your personal situation, things like bereavement or care. 3, if you're renovating, be realistic. Only genuinely derelict properties are going to be considered for a tax band deletion by the VOA. And finally, 2 golden rules that apply to everything. Always talk to your counsel proactively and keep a paper trail. Keep records of every letter, every date, and all your evidence. And I just want to leave you with this final thought. In the world we live in now, leaving a property empty is no longer a neutral, passive financial decision. With these new premiums, it is an active liability. That means planning ahead isn't just a nice idea, it's absolutely essential. Okay, now before we wrap up, a quick but very important disclaimer. The information we've shared today is for general guidance only. It's not a substitute for professional advice that's tailored to you, because everyone's situation is different.
And for that very reason, if you need expert advice that's built around your specific circumstances, we really do encourage you to get in touch with the team at My Tax Accountant. You can call them on 0208 570 8531, or you can drop them an email at info@mytaxaccountant.co.uk. And finally, if you found this helpful and want to stay up to date with more guides like this, please do take a moment to subscribe to the My Tax Accountant YouTube channel. Thanks so much for watching.